literally going to just do things off the cuff today. If I miss things out, I'll do a follow-up video as well. But what you might want to do is you might want to get a pen and some paper and just make some notes. You always have the option to like stop the video halfway through, or when you get tired, when you get bored, and come back to it, replay it, rewatch it, because hopefully I'm going to drop some really useful information for you guys. So the first thing to note is that, like, you know, when you look at Tesla, when it first launched on the 2nd of July 2010, the stock price, the share price, was $1.28 USD, and at its all-time high it reached $407. Now admittedly that's like a 10-year period in which that's happened, and that's part of the argument, is that you want to be looking for companies or organizations that you're going to hold on for a long time. And I'm going to go through in this video a little bit later on as to how you find these and how you hold on. But again, just to illustrate another example, if we go to Amazon, you know, Amazon started trading at 9 cents. And again, you know, if you would have held on from 9 cents or early on for 20 odd years, you know, the share price has gone up, would have gone up $167.25. Another example, Apple. Apple started trading at 11 cents. And again, you know, it's gone all the way up to prices of 162 and 189. And I could go on with some other examples. Facebook started at $40, and yeah, Nvidia started trading at 0.82 cents, 82 cents. So if you want to spot these companies early, there are a number of things that you need to do, or there are a number of things that I do when I assess a company. And the first thing is like shareholder ownership, inside ownership. Now the reason for this is that it demonstrates a number of different things. One of the things it demonstrates is that if the owner operator has shares in a company, it's that he perceives that there's value in those shares. So that's number one. If he perceives that there's value in their shares, you know, he's going to make decisions as if he is a shareholder. So he's going to act in the interests because he wants to protect the value of his shares. And so that means if you're holding those shares too, it's almost like you have a guy in there who's acting as your representative. Typically what I look for is at least 10%, you know, earlier stage companies, penny stocks, certain penny stocks that I'll talk about as well, they will have much higher ownership. They may have like 40, 50, 60, sometimes 70% as well. And again, you have to think about this as like, why is this guy holding on to like 40, 50, 60 or 70% worth of ownership of a company if he doesn't perceive that there's going to be future value in those shares? And so a great example, you know, I'll just pull some stuff up on the screen now, is like, you know, Elon Musk currently has a 12.95 stake in Tesla. Jeff Bezos has about 10%. Mark Zuckerberg has 13.6%. And Steve Jobs of Apple owned 11%. And so another point that's really, really important is you shouldn't necessarily be looking for companies that turn a profit straight away. And the reason for this is historically some of the biggest companies in the world have not turned a profit instantly. Again, you know, you'll see that it took 5 years for Facebook to reach profitability. Apple almost went bankrupt, and Tesla spent 17 years being unprofitable as well. And Amazon, it took them 9 years to start turning a profit. This kind of goes against the grain because typically, like, people try and look at businesses, they try and look for good businesses make money, right? But the principle here is that we're looking at like early stage companies who are reinvesting all of their profits back into research and development. The reason Tesla is so successful right now is because it took such a hit early on in reinvesting all of its profits back into machine learning and robotics. If you look at the factories, the Tesla factories, how like high level they are, they have so many robotics in there to automate so much of the process, which is what makes them so ahead of the game now. You know, but in order to get ahead of the game, they had to take a hit for 19 years, I think it was. And they had to reinvest all of their profits back into the company in order to grow. And the same can be said not just for Tesla, you know, but for Apple as well, and for Amazon too. And so operating a loss doesn't necessarily mean that you have a bad business. The other thing that like a lot of investors get scared about is stock splits. Now, stock splits, company owners will do this in order to raise capital from the stock market. Basically, what stock splits are is that they increase the amount of shares available to the market. So what this does is it dilutes initial shareholders. Now, the thing is with a stock split, if I have 10 shares and there's a 2-for-1 stock split, I will get an additional 10 shares. So I'll get an additional 20 shares in total. But the reason shareholders get anxious or scared about this is that they automatically think that there are financial problems. Yes, it's a way in which a company generates more cash, and they, generally speaking, they will generate. You have to kind of look at this on a case-by-case basis, but stock splits are there. Like, you know, someone like Elon Musk did a stock split because he wanted to generate more cash, so that then he could reinvest in the automation, he could reinvest in the robotics, which in turn drives innovation within the company. It makes it more efficient. You know, you're relying less on humans, which is an additional cost, which over time, you know, it streamlines the business, it makes it more cost efficient, it makes it more effective. But, you know, a lot of investors, they get scared by stock splits because they're looking at the immediate situation. Oh no, there's a stock split, there's financial problems, they don't have any money, they're not making money, rather than looking at the long-term gain. Like, you know, why is there a stock split? What is the company doing with that money? You know, asking the right questions. And typically what you'll see in the stock market is when there is a stock split, a lot of the time, you see the share price tank down and go to red. And this is another issue, you know, a lot of these trading platforms, they're designed for you to fail. You know, there's a very particular reason why the red is the red and the green is the green. And so, you know, the color red is historically, it's associated with danger, with sacrifice, with fear, right, with anxiety. And what does that do? You know, if you're not thinking, if you're not analyzing, if you're not observing, if you're not asking questions, for example, about a stock split, why is this stock split taking place? What are they doing with the money? You know, are they reinvesting? Automatically, people just look at the red. They look at the red, they look at the share price going down because of like what red represents, rather than taking a deep breath, walking away, going back and thinking back as to why you initially invested in this company in the first place. And again, I will talk more about this a little bit more in the video a little later on. The red kind of triggers people to sell in a panic, which means the price decreases, and that's actually when you want to be buying. And again, like with green, it's the same kind of thing. It's like green is associated with new growth, vibrant health, new beginnings, a sense of optimism. What does that do? It encourages you to start buying when it's green, right? And it's almost like you have to like reverse engineer your brain a little bit, pull yourself back, observe the bigger picture. Okay, like why did I invest in this company? You know, what is the value that they bring? You know, and again, I'll talk more about this a little later on in the video and kind of show you guys a little bit how you can spot and find these kind of individuals as well as just the unprofitability of a business, which, you know, in some cases can be like pretty long. You know, like I was saying earlier, like Tesla spent 17 years unprofitable. You had to have a level of confidence in the value that they were bringing to the industry, or a level of confidence in the individual to hold on and stick to this stock, right? But like the other thing obviously is these stock splits. You know, Tesla had 2 stock splits. Amazon had 4 stock splits. Nvidia had stock splits in 2000, 2001, 2006, 2007 and 2021. And so like my whole point, I suppose, to say is that like stock splits are not an indication of a bad business. And so one of the key things that you really want to look for when you're trying to find these kind of hidden gems, if you like, these micro cap or small cap companies that have potential for like huge growth, you know, so long as you're holding for like 10 years, it can be 20 years, it can be 30 years, is in the individual. You know, when you look back at some of those companies I've mentioned, when you look at like Amazon and Jeff Bezos, you know, when you look at Meta or Facebook with Mark Zuckerberg, when you look at Tesla with Elon Musk, you know, people associate all those companies and brands with that individual. That's one of the first things that I look for. I look for individuals, key players, like serious players who have some kind of indication, right, that something special about them. Now, one of these guys is a guy called Patrick Soon-Shiong, and I've spoken about him like in about 3 other videos, and I keep on like banging on about this guy because he's just like a straight he's a special guy. He's a really special guy. Reason being, he grew up in South Africa. He was born in South Africa. His parents were Chinese immigrants. They moved to South Africa for a bit more prosperity, right? This guy is like a self-made billionaire. He came from nothing. He grew up in South Africa at the time of the apartheid. And this, for me, was like something really interesting about this guy. This dude has like strength of character, real strength of character, which is something which cannot be found in the numbers in a company. You can't find an individual strength of character in the economics of a business. You would have to say that people like Jeff Bezos, people like Elon Musk, they have a strength of character, but to be able to sustain problems with finances, sustaining the marathon of running a business for 10 to 20 or 30 years before it gets to fruition. Patrick Soon-Shiong is one of these guys. Why is he one of these guys? Well, the first thing is that he grew up in South Africa with nothing. He was the child of Chinese immigrants. He self-funded his own education. He managed to get out of South Africa. He studied at the University of British Columbia. He then moved on to the US. He's got Canadian and US citizenship. But like, what's special about this guy is he's a transplant surgeon. He's a billionaire. He's an entrepreneur. He's a part owner of Los Angeles Lakers, right? There's pictures of him with Kobe. So a billionaire entrepreneur, a transplant surgeon, usually a person who's good is only doing one of these things, right? He's doing both of these things. This guy already has a proven track record. Much like Elon Musk with Tesla. Before he was at Tesla, he was at PayPal. It's almost as if like the money that he made from PayPal, he reinvested that into kind of almost like the startup fees to start up Tesla. This guy, Patrick Soon-Shiong, has done exactly the same thing. He was the inventor of a drug called Abraxane. And so Patrick Soon-Shiong, he invented this drug, Abraxane, which was part of the company Abraxis Bioscience, which he actually owned. And he sold this company on to Celgene for around like £2 billion. So again, what I'm trying to convey here, it comes back to these individuals, like finding very special individuals who are at the helm of businesses. If you can find a guy who's already a billionaire, or a millionaire, much like Elon Musk was when he started Tesla, he was already a millionaire. If you can find that guy now, you're kind of already onto something. This is an individual who has a proven track record. We're talking about Patrick Soon-Shiong, the owner of Immunity Bio, whom I've put money in. He's already a billionaire and he's come back for another go, right? He knows exactly what he's doing. He's already developed medications in the past, and he's coming back for a second round. And so looking at this article about Immunity Bio on Yahoo Finance, you'll see that like right here, right, it says Patrick Soon-Shiong owns 64% of this company. Do you think that he would really be owning 64% of a company if he thought it was dog shit? If he thought it wasn't worth anything? And so you'll see up on your screen now, I bought Immunity Bio at 1.34, right? I bought 2,242 shares, okay? It cost me $3,000 and it's now up to $11.65, okay? That's a 287% return. And so the reason I'm showing you this is it comes back to like what I was telling you about, cash flow or like debt, all of these kind of things. They're not true, the true reflection of a good business. Historically, Amazon had problems with financing. They had to borrow a lot of money. The reason that Immunity Bio was so cheap was because Patrick Soon-Shiong is financing all of this stuff himself. He's financing it through the sale of his previous company. He has a kind of like foundation or a separate like LLP, which he uses to fund innovative companies. So through that arm, he then funds Immunity Bio. And so recently, Immunity Bio, like the price skyrocketed, 287%. I'm just saying this to kind of illustrate to you, like, I had the foresight to see that there's an individual here who's very much like in the Elon Musk type mold, right? In his field, he is almost like the Elon Musk of pharma, right? And so whilst everyone was like very nervous because of the financials and some stuff that happened in the news around financials and having to like get rid of 100 staff or something like this, again, you can have a look at this yourself, but like the point I'm saying is that there's no way in hope in hell that he's going to allow this to fail. He has billions of dollars that he's funding this, and thirdly, he's been here before. This is tried and tested. You know, he sold his previous company to Celgene for billions of pounds. And he understands the process of manufacturing medications. And so again, you know, like one of the elements that you're going to need in order to kind of help to identify some of these companies that have the potential to be like multi-baggers or 100 baggers is you have to kind of look very much in the future. You have to kind of anticipate a little bit what the world might look like in the future. You know, certainly with Immunity Bio, there's a very practical way in which you can do this. You know, if you go onto their website and you just go to their pipeline, you will see all of the drugs, all of the medications that they have, that they're working on at the moment. And this is an indication of what the company's portfolio of products, if you like, medications, what they're going to look like as a company in the future once these are developed. And, you know, once they have a portfolio of 10, 12, 15 medications, you know, that's going to cause the price to skyrocket. So if you go on their website and you go to the pipeline section, you will you will get insight into all of the medications that they have in the progress at the moment. And you can see that there are different phases in total. After phase 3, it goes to the FDA for approval. And after approval, then you're allowed to like market it and start selling it. So the point is again, it comes back to this thing of like looking into the future of what this company will become, you know, and as they build out different medications for bladder cancer, for lung cancer, for pancreatic cancer, for Lynch syndrome, and so on, you know, as they build this all out, they will have a very comprehensive company which will be ripe potentially for acquisition from a larger pharma company. And that's where the growth in the price of the share will come. And just on that point, you know, one of the very important things to do in your assessment, this is something which is really, really important, and I'm going to stress it, is that the way that you evaluate a company is to look at the value it brings to the world. I'm going to say that again. When you observe the value of a company, you have to look at the value it brings to the world. You know, the whole principle in business, you know, humans are kind of, I'm just going to say, it's like humans are innately lazy. You know, we're all looking for things to make our life easier. We all have problems in our life. And so the most successful businesses, you know, apart from like food businesses and like maybe drinks businesses as well, you know, the remaining businesses, what they do is they solve very big problems, or they make your life easier, more convenient. You know, they offer something which is faster, which is cheaper, which is quicker, which is more efficient. You know, these are the things that you need to look for when you're trying to assess a business. You know, how is this business going to change the world? With the likes of, like, you know, for example, Tesla, you know, why are they so successful? Because they manufacture EV vehicles, electrical vehicles. You know, why are electrical vehicles important? You know, there's this whole narrative around climate change. You know, these EVs, Tesla's EVs, are framed as a more environmentally friendly solution to the problem. You know, why is Amazon so successful? Convenience. It offers you something faster, cheaper, and quicker than the competition. That's why it's so successful. You know, this is how these companies have kind of almost like changed the world, if you like. And it's the same with Immunity Bio. You know, where is the value? What value do they bring to the world? They are bringing treatments that are going to save people's lives, right? That's where the value is, and that's why, you know, companies are successful. And so, like, one of the key things, you know, now that I've kind of mentioned that, the other key thing, like, obviously, if you're going to, like, dabble in this kind of thing, is you have to understand, like, the volatility that you're dealing with. You know, just to illustrate, look, you can see right here, like, how volatile the share price has been. You know, Immunity Bio has been at $30, and it's been at up to, like, $39, right? When I bought it, You know, it was $39 in 2021 around the time of COVID, because they were developing a COVID vaccine. You know, everyone was getting super excited, everyone was getting hyped up, and so they bought, and the price skyrocketed, right? As soon as there were concerns around the finances, and nothing was really happening, you know, the price trickled down. I think the lowest low was $1.21, you know, and I bought it at 1.31. And I'm holding it on for the long term with the view that this pipeline is going to be full up, and you know, I will make an assessment closer to the time as to like at what point I'm going to sell it. You know, will I sell it if there's an acquisition? Do I hold? That will depend on the market cap of the company that buys it. So going back to you know, Abraxane or Abraxis Science, you know, Patrick Soon-Shiong's company, when he sold it to Celgene, later on, Celgene was acquired by another company. I think it was Johnson & Johnson. Again, you can take a look at that yourself. So, you know, depending on the market cap, you know, maybe I'll hold on a little bit longer because it might potentially get acquired by another company later on. So again, you know, Immunity Bio is a good example of one that I spotted. You know, it's at $5.19 at the moment. You know, do I think it's expensive? Do I think it's cheap? It depends. You know, I think people are kind of fickle. You know, I anticipate there are going to be future problems, if you like, or growing pains with Immunity Bio, and the price may go down to like maybe $1.5, $2, $3, that kind of thing. You know, I will be looking at this closely, and potentially I'm going to be buying more in the future when it hits, when there are problems, when it's at $2. You know, I'm going to be buying more, so that I can build up my shareholder ownership of Immunity Bio, so that I get more and more shares with this long-term view, this long-term vision into the future, when that pipeline is full, when that portfolio is full. And so another of these biotech companies that I've kind of invested in is a company called Precigen. Now, Precigen, they look really cheap at the moment. You know, if I'm just going to say it, it's like, it's not financial advice, but hypothetically, if I had money and I had not like maxed out my ISA for the year, you know, this is a company that I'd be seriously considering putting money into. It's trading at 1.40, and again, you know, one of the things that I was looking at is who are the owner operators, who are the people behind the scenes who are invested in this company. And this is when I came across a guy called Randall Kirk. Randall Kirk has 88,138,555 shares in this company. You know, that's a weighting of 10.43%. He took New River Pharmaceuticals public in 2004, and he sold the company later on for 2.6 billion. And historically, again, you know, he has invested in a number of biotech companies. He invested in Skios, which was later sold to Johnson & Johnson for 2.4 billion. He invested in Clinical Data and sold it for 1.2 billion. So again, this is an individual who has a proven track record in this field. He knows about mergers and acquisitions, you know, and again, it comes back to this point that I was talking earlier about investing in individuals, you know. And so if you look at their pipeline, again, it's this thing of like evaluating the company, evaluating the people behind the scenes. I did another video about Precigen, which you'll kind of see on my channel somewhere. But the point I'm trying to get at is like, again, these guys are like creating treatments that are going to change people's lives. You know, these are life-changing treatments that change the world. And so again, the other thing to look at with them is that this dates back from like almost this time last year. So the status on their website of their pipeline and where they are, once they have these announcements, once they make progress, they build up their product line, people get excited, and the share price shoots up because of the news, right? You know, and again, like I said before, this can be like, you know, the prices can take big swings up and down, and you have to just go back on this whole principle, this whole premise that I've explained around like looking at key individuals, key players who have a proven track record, who own shares in the company, because share ownership is a reflection of the value that they consider. You know, if they didn't consider there to be any value in the company, they would forego their shares and they would go somewhere else. And again, you know, you'll see up on the screen now, I bought 7,000 shares of Precigen at 1.08. You know, if you look at like potentially where this could go, You know, it could go to, like, again, I have to take a view later on as to like where they go, how much they develop, and so on and so forth. But again, it's like viewing these 8,000 shares, these 7,000 shares that I have, sorry, you know, total return so far is 29.4%. But like looking again at this pipeline, holding on, and it might not necessarily with these two companies be that you have to hold on necessarily for like more than 10 years. You know, again, it's about reviewing where they are in the future, what with the development of some of these the medications in their pipeline, seeing how comprehensive the pipeline is, and once they have this comprehensive line of products, you know, that's probably around the time I will sell. But again, it's going to be done on a case-by-case basis. But again, it's just to illustrate. But you know, just to highlight, Precigen's share price. If you look up on the screen, you'll see like how volatile this can be, and you have to be comfortable with like big drops. You know, you're not always going to get it right. You know, but certainly with Precigen, for example, you know, at its high, its all-time high was $64.62, right? Bearing in mind that I bought this for just over $1, and I have 7,000 shares, you know, you can do the maths and figure out how much that is. And so again, like, I was kind of talking about like predicting the future. How do you predict the future? One of the ways in which you can do this is kind of to anticipate trends in the future. You know, one of the key things, and I've done a couple of videos on this, is cannabis. You know, there is a changing landscape with cannabis at the moment. You know, there are tailwinds taking place in the US. I did some videos around kind of certain changes that are taking place. The rescheduling of cannabis is one of them. You know, the changing perceptions of cannabis associated now with like having some kind of like medical properties, right? This is going to make cannabis more accessible, more acceptable. There's going to be a relaxation of cannabis laws. There is the Safer Banking Act. Again, if you haven't heard about these things, you know, I've made a couple of videos on this, and I've in the descriptions of those videos as well, there are like other resources as well which I've had a look at. But again, it's like looking again at the 10-year horizon of cannabis, looking back in history at like what happened during Prohibition. You know, after Prohibition, when the attitudes around alcohol relaxed. Look at the landscape in which we live in now, where there's just an abundance of choice of alcohol. You know, this is kind of almost with cannabis. It's a question of like history repeating itself, in the sense that yes, cannabis flower is going to be available for people to smoke, but there will also be the development of other cannabis products as well. You know, you've got like cannabis gummies. You have like creams. You know, you have certain creams with THC in them. What does the landscape look like for cannabis over the next 10 years with the relaxation of attitudes? You know, what is the impact that that's going to have on cannabis companies? Now, I did 2 separate videos on 2 cannabis companies that I really like. The reason I like them is very simple, is that they produce like some of the best cannabis, it's award-winning cannabis, excuse me, and they have like a big moat. Their big moat is that they create the cheapest cannabis per pound. One of these companies is called Glasshouse Brands, and one of these companies is called Grown Rogue. And again, you know, Glasshouse Brands have like a very unique moat. If you don't know what a moat is, it's kind of like a very unique thing, which competitive advantage that they have. And again, I made a video about it. You'll see it around here or in the description below. And Grown Rogue, you know, they have a very, very special guy called Obi Strickler there. Again, it comes back to the individuals. And again, in the assessment of these companies, these individuals have very high ownership in these companies. And again, you have to kind of hedge your bets a little bit in certain things. Assess individuals who are passionate. You know, Obi Strickler is passionate about manufacturing cannabis flower. He has a team of very, very passionate individuals as well. And so looking at Immunity Bio and looking at Precigen, looking at the cannabis companies that I mentioned, Glasshouse Brands and Grown Rogue, you know, these seem to be companies that are relatively easy to kind of predict the future, as in anticipating the future value that they're going to bring, which will in turn increase the share price. There are a couple of other companies that I featured, and again, it's the same kind of principle. It's like I've looked at these kind of things. I've looked at the inside ownership. I've looked at the owner-operators, the guys leading the charge. I've looked a little bit at their strategic outlook, how they're planning to expand. You know, is the business scalable? And again, I've done separate videos on them. You know, if I miss out any information, I'll make more videos in the future about this theme, about this topic. There are a couple of other companies that I've been looking at, which to me, they're a little bit harder to predict, if you like. One of them is a company called Ginkgo Bioworks, who seem to be doing quite interesting stuff. However, there are question marks around like the inside operations, how they've handled the inside operations of the business. There has been a lot of hype around them. They have had a lot of funding, and I'm struggling to, when I'm looking at the owner operators, I haven't done enough research. I'm looking at information from different sources, and then I would just take a step back, observe all the information, and make a decision. So that's one company that I'm looking at, which I haven't kind of dipped my toe in at all yet. And the other one is a company called Archer Aviation. So what they do is they provide these like super small aeroplanes that only have capacity for 4 people. Now, you know, in terms of like innovation, this seems like awesome, but at the same time, you know, the thing that I'm struggling to get my head around is like, well, the first thing is looking at how long it's taken Tesla to get to where they are, to a point where they are profitable. You know, it was like 17 years. How long would it take a company of this type? You know, great. You know, you can go from Newark Airport to New York City in 10 minutes. You know, there's a time save. You know, it's efficient travel. That's the problem that they solve. At the same time, how many people are going to be able to afford this kind of thing? You know, and how practical is it in terms of like launching it and landing? You know, those were big question marks for me, and I can't quite like anticipate the future with something of this nature. I find it a little bit difficult to kind of get my head around like how this is going to work in practice, right? Which is why, you know, looking at Immunity Bio or Precigen or the cannabis companies I've mentioned, it's a little bit more predictable. You know, you can anticipate what with the legalization of cannabis, not legalization, sorry, the gradual relaxation in places like the US, in Portugal, and across the world, in Canada as well, you can anticipate that there's a changing mentality towards cannabis, which in turn is going to change, it's going to facilitate business. It's going to help these cannabis companies to grow. And what you want to do is you want to hedge your bets on the best individuals who know the product and who are making the cheapest and best quality product. Much the same with Precigen and Immunity Bio. You know, you can hedge your bets against experienced individuals who have a proven track record, who know exactly what they're doing, right? You have to hedge your bets with these individuals. Whereas with Archer, you know, it seems a little bit more difficult. This is something like very, very new. This is never before seen. And I'm just concerned around like the timeline with this. Is this going to be like a 30-year thing? You know, with the cannabis and with the biotech companies, you know, they've already had, I don't want to speculate, but you can check on the share price. You know, certainly with Immunity Bio and Precigen, they've been around for a really long time, and it's only now that they're getting to a crunch point where things are going to change for them over the next two to 5 years, I expect. With cannabis, I think the same things are going to change over the next 2 to 5 to 10 years. With this Archer Aviation, it seems like this is going to be like a much longer thing. And the final thing I'll say is like, you have to be confident with volatility, and you don't want to get caught up in like buying the price when it skyrockets up because of certain news. You know, you want to be like investing in companies, like I said before, that are providing value. You know, successful companies provide value. They make things better, faster, cheaper, more efficient. They solve big problems of the world, and that's what you really want to be looking at, is finding these companies, finding them when they're out of favor. Maybe there's a dilution in the shares. Maybe you know, they're borrowing money in order to expand. Maybe they don't turn a profit because all of their profits, they have actually made money, but because all of the money they've made is reinvested in expansion, in acquisitions, in research and development, you know, they can't post that as profit. So that's like the big takeaway. I really hope that this was helpful. I mean, again, it was a little bit unscripted. I understand there's a lot of information here. You may want to watch this a few times. You may have questions. If you do have questions, drop comments below and I'll do my best to get back to you. And again, you know, happy to make more videos about this theme because it's something which really interests me. But look, all the best, have a great day, and speak to you soon. Take care.